Hello, my name is Maria Bezubova, and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is June 2nd, and this is a weekly markets update. Let's have a look at the news of week 22 and see what are the next trends. The key news of the week was announcement of the Indian urea purchase tender. Indians are looking into purchase of 1.5 million tons, all to the west coast, with shipment until end of July. This announcement will support price level during seasonally low summertime and, to my opinion, will result in higher reset price level this year than the market previously expected. Chinese exports is another global uncertainty. Export inspection for urea have started, but very slow pace of these inspections as well as very strict target FOB levels limit export activity. Prohibition of exports to India also will not help to move significant Chinese volumes. However, of course, some re-export activity will take place. So, in fact, it is a question mark how much of product China will be able to export during June-September export window. One more interesting news of last week was a legal hassle around President Trump's tariffs. The federal court ruled to block the tariffs because US president doesn't have the right to imply such tariffs at all, according to the court's opinion. An appeal appeared immediately and the hassle continues. But in general, as we already discussed with you, tariffs is still not something imprinted in stone, and there will be many more or less chaotic moves around them before the final result will be known. Let's move to the situation in the regional markets. In Northern Africa, there was limited trading activity last week, but still the prices firmed, despite Egyptian production revival after gas supply issues. In Egypt, offers were at the level of $405 FOB. In Algeria, sales were registered at even higher level, $410 for a significant amount, at least 25,000 tons, for June loading. In the Black Sea, Turkmen producer Garabogaz is expected to finally come back on stream soon. And also a news emerged last week that a large contract was set between Garabogaz and an international trader for supply of 1 million tons of urea during next year and a half until the end of 2026. This makes more than 60% of theoretical production during this period of time. Demand in Europe is an interesting topic as well. From the one hand, the season is over and the market is waiting for the reset price to start off-season purchases. However, from the other hand, duties at Russian fertilizers and increasing nitrates price is pushing buyers to make purchases earlier this year than it usually happens. Last week, there was a number of small inquiries at the level around $420 to $30 CFR, and even higher than that. The buyers are nervous as they expect the off-season price will not be that low. Maybe the Garabogaz deal is well prepared to be supplied to Europe to use this emerging opportunity of Russian product substitution. We will see it very soon. In the Middle East, price level also moved higher to $375 to $85 FOB. On Thursday, SABIC announced sales of 40,000 to 45,000 tons lot at $385 FOB for July loading. Other producers also move offers to this level. Price in the US continues to decrease as top-dress demand is delayed due to heavy rainfalls across the Corn Belt. However, market participants expect that in June there will be one more wave of purchases for the top dress that should keep prices from sliding more. Demand in Latin America and Brazil specifically is very light. Price level last week hovered around $390 to $400 CFR. Buyers evaluate this price level as too high, taking into account slipping crops prices and thus decreasing affordability. Demand in Australia is lagging significantly behind last year and even past 5-year average due to consistently bad weather in May. Market players expect that if, or rather when, the weather improves, there will be a wave of purchases. However, it is already clear that demand this year will be much lower anyways. Paper values corrected upwards for July across benchmarks amid news about Indian tender. Egypt FOB future price for July increased by $8 to $395 average. Arab Gulf FOB future price slightly increased for both June and July, reaching $380 FOB average for August. Brazil CFR corrected by $80 upwards for June and slightly for July, reaching $400 CFR average for August. Even NOLA FOB increased by $10 for July and reached the average of $168 for August. So, as you see, market is not expecting now significant price dip in summer. Ammonium sulfate market was not active last week, with prices largely stable across all benchmarks. The nitrates prices continued firming. After just a couple of days of July price announcement, Yara increased prices by 15 euros. LAT nitrogen followed shortly. Despite such unprecedented price level, demand in Europe is firming, as buyers expect prices to increase even more as a result of duties at Russian products. In Baltics, prices firmed by $10 more last week, amid active demand from Brazil and other Latin American markets. AN still has better per nitrogen unit ratio versus urea, so demand in front of the main nitrogen season increases. In Egypt, NICC has closed a sales tender that included 10,000 tons of CAN. The price mentioned in the market is between $275 and $80 FOB, which is $10 higher versus last tender in mid-April. Ammonia market finally showed some signs of modest price firming in the Middle East, while in the US the situation is vice versa. In Tampa, Tramo sold 25,000 tons of spot product at $370 CFR, which is $35 lower versus agreed Tampa price in May. The sale comes right before price agreement, or rather announcement, for June, and clearly this will be the level. The product will be sourced from the Arab Gulf. In the Middle East, some traders are expecting spot values to move a bit higher to the level of $300 to $310 FOB, mostly due to outage of Ma'aden plant for maintenance. There is no significant shifts in the demand side, so let's see if these expectations transform into actual upward trend. In Algeria, the highest sales was conducted at 400 FOB last week, but this was not confirmed by the parties. Other than that, LAT nitrogen purchased Russian product again last week, 10 to 12,000 tons. In the phosphates market, prices continue climbing, despite growing buyers resistant such incredibly high price level. The market is also digesting news on EU tariffs for Russian product, and how this could affect long-standing trade flows. Russian suppliers are not wasting time during this last month before duties will come into force. As per information from the market, they started pushing buyers for purchases earlier and in the larger amounts than usually. Prices for spot tons are premium. Meantime, OCP reported multiple DAP sales to the Western Europe for June-July loading at the level between $740 to $50 CFR and at even higher level to the Eastern Europe. OCP January-March exports of combined DAP and MAP reached a record height of 1.73 million tons. Egyptian NCIC closed a sales tender last week, as mentioned, that included 30,000 tons of DAP, and the price level was $735 to $40 FOB. This is $50 higher versus last tender in mid-April. Jordanian GPMC also closed a sales tender for 45,000 tons of DAP last week for second half June loading. The price is rumored to be in the mid-740s, no confirmation from the parties though. Ethiopian ABC seems to have secured another 2 lots of DAP after countering suppliers at $700 FOB. Mid-Gulf and Samsung proposed these 2 lots of Chinese product. In India, purchases continued. The country is expecting good monsoon, so phosphates are needed very much. Last week, Ma'aden sold another 100,000 tons of DAP at the levels same to the last done deal, $738 CFR. So in general, Indian CFR level is slowly climbing despite previous government announcements about potential CFR price cap. Looking at the situation in the European market, because of duties for Russian products, some market players in India hope that DAP will be diverted to India in the future. However, let's see if it plays out this way in a short term. Also last week, there were 2 tenders for NPs and NPKs announced in India. RCF is seeking for 35,000 tons of NP 2020 and NPK 1026-26 each. FACT also announced a tender for 35,000 tons of NPK 1026-26. Both tenders will close early this week. China, of course, continues to be the newsmaker in the market. Export inspections for DAP and MAP started, and sales are ongoing. Producers are targeting $720 to $30 FOB level for future sales for DAP, as per market information. However, inspections for NPs and NPS were halted, and it came as a surprise to the market. Chinese NPs exports were unprecedented in Q1 this year, so perhaps the government decided to keep products for the domestic market and focus at DAP and MAP for now. In the US, there was no activity in NOLA last week, but prices are assessed higher. DAP June barges price is indicated at the level between $700 and $710 FOB per short ton. MAP barges were assessed even higher at around $720 FOB per short ton. But no sales were reported. The main question for the US buyers further in the year will be how many phosphate tons the affordability will let to actually enter the market. MAP prices in Brazil heard higher versus a week ago, around $725 CFR, but no fresh deals happened, as buyers are resisting such level. Moving to the fundamentals. European natural gas futures increased over the past 14 days. Heavy maintenances in Norwegian upstream assets, downtime at 2 LNG terminals, and floating storage all contributed to limiting supply and injections in Europe. Hopes for the return of Russian gas have also faded. Despite ongoing price incentives for injections, the European stock build slowed down below a 3-year average for these dates. At the same time, current temperatures in Europe are not pushing domestic demand. So at the end of last week, price dropped to the level lower than 34 euros per megawatt hour. US natural gas futures hovered at the level around $3.5 per MMBTU, weighed down by reduced demand and lower gas flows to LNG export plants. In May, average feed gas to the 8 major LNG facilities has declined from April's record, mainly due to maintenance at several plants, as well as short outages at Freeport LNG. More maintenance is expected in June, especially at Sabine Pass. At the same time, US gas output also has slightly fallen in May from April's peak, mostly due to routine spring pipeline maintenance. Meanwhile, weather forecasts show warmer than normal temperatures into mid-June, which may support demand for natural gas used in air conditioning. Agricultural commodities future prices again lost positive momentum last week. Wheat futures dropped again to the level of $5.33 per bushel, pressured by ample global supplies and sluggish demand. Australian wheat inventories are expected to end the season significantly higher, as exports to China dropped sharply. Only 500,000 tons were shipped between October and March, down from 2.9 million tons a year earlier. Also, rising competition from Russian wheat and the upcoming Northern Hemisphere harvest are set to flood the market with cheap grain. The European Commission revised its 25-26 wheat production forecast for the EU to 127 million tons, which is 13% higher than the flood-inhibited last harvest. In China, favorable harvest weather is expected this week, and authorities are pushing to speed up harvest operations ahead of rains. The Indian wheat harvest is expected also to be strong, following several years of dry weather that affected yields. Corn futures fell toward $4.43 per bushel as favorable weather patterns moved across key growing areas, pressuring prices. A mix of rain and sunshine is expected in the coming weeks, supporting crop development and adding downward pressure on futures. Forecasts call for drier conditions through the weekend across the central US, with widespread rain likely over the following 6 to 10 days. Meanwhile, cheap South American crops are undercutting US corn export prices. Argentina's harvest is advancing, and Brazil's safrinha crop is just beginning, contributing to an increase in global supply. These developments have weighed on corn prices, limiting any upward momentum in the market. Soybean futures dropped to the level of $10.4 per bushel on Friday, as traders assessed improving domestic planting progress with mixed global weather conditions and updated crush estimates. As of Sunday, 76% of the US soybean crop had been planted, well ahead of the 5-year average. However, shifting weather forecasts, rainfall in the Midwest, followed by a potential dry spell, have added uncertainty to yield prospects. Despite expanded processing capacity, analysts noted a slowdown in crushing in recent months due to narrower margins and seasonal maintenance. Global weather remains a concern, with limited rainfall in Brazil and France doing little to relieve crop stress, adding a layer of caution to the market outlook. Moving to the shipping industry. Containerized freight index climbed sharply by almost 500 points last week. President Donald Trump's pause on import tariffs led to a resumption of US-bound traffic after the initial collapse of trans-Pacific volumes. Freight rates from Shanghai to Los Angeles have jumped by 17% in the past week. Spot rates to New York have risen 14%. Rates from Shanghai to Rotterdam and Genoa have also risen by 6% and 3% respectively. This was the first double-digit rise in the composite index since July 2024. However, market experts expect the supply-demand balance to weaken again in the second half of this year. The volatility and timing of rate changes will depend on the outcome of legal challenges to Trump's tariffs and on capacity changes related to the introduction of the US penalties on Chinese ships, which are uncertain. The Baltic Exchange Dry Index increased significantly last week. The Capesize market gained notable momentum, with the Atlantic, especially the South Brazil to China market, being main driver of strength, Pacific being particularly active, and the North Atlantic showing late week improvement. For the Panamax market, it was one more depressed week across basins. Ultra-Supermax segment continued to struggle with a lack of fresh inquiries and an expanding tonnage list. For Handysize segment, it was a positive week, with rates rising across most loading areas. To sum up, Indian purchase tender that was announced last week will support prices in the off-season in July, which is already happening. Of course, we will need to see the effect of additional tons coming back into the market from Turkmen Garabogaz and Nigerian Dangote, as well as watch how Chinese export plans will be realized. Also, as usually, we will need to follow the production situation in Egypt, which is moving into summer temperatures and might have more gas supply hiccups in June. But in my opinion, this year we will not see in off-season as low prices as we thought a month ago. Please let me know in the comments what level we should expect. I will be glad to discuss. Announcement of EU duties at Russian products pushed European nitrates producers to increase prices, and buyers for both nitrogen products and phosphates to start purchasing in front of the season more actively. Phosphates market in general remained bullish with tight supply and despite deteriorating affordability. Chinese DAP and MAP will soon arrive to the international market, as export inspections started last week, but unexpectedly, NP and NPS export were halted. So again, as we already discussed earlier, market will not see any relief in phosphates prices level anytime soon, at least in Q3 for sure. Ammonia price slipped further in the west, and market is eagerly awaiting June contract price at Tampa. At the same time, in the east, price showed very slight, however, movement towards stabilization. Gas price, both in Europe and US, dropped amid seasonal patterns and mild temperatures. Agricultural commodities futures prices all decreased after a slight rebound last week due to favorable weather conditions and good crops situation across the globe, which will result in much higher harvest. Container shipping prices increased significantly as a result of the hassle around US tariffs. Bulk shipping activity was also generally positive, supported mostly by business and Cape-size segment across basins. So, let's see what is next around the corner. But it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon. Enjoy summer!